We're going to look at some balance day adjustments for revenue. So at the moment we know that balance day adjustments are required for depreciation, prepaid expenses and accrued expenses. We're going to add in two more. We've got a prepaid revenue and an accrued revenue. So the top three we covered in Unit 3, so let's have a look at the next two. Before we do that, let's just refresh what we know from Unit 3. For example, if I had a mobile phone plan where I prepaid my calls in July, and that's actually $50 that I'm not going to use those calls until August, which is a common way that a lot of people pay their mobile phone. So we call this a prepaid expense, and if I were to do a balance sheet at the end of July, I'd list that as a current asset. And the reason why is I've paid for something which I haven't used yet. So I've got a resource which I control. I can make the phone calls and use the data. There's a past event. I paid $50 in July, and there'll be an inflow of future economic benefits because I'll be able to use my phone to run my business. Then we also had a different type of mobile phone plan. That could be where I make calls and use data in August, and then I don't get the bill until September. So if I was to do a balance sheet, I'd actually call that an accrued expense at the end of October. And I'd list that as a current liability. And the reason is I've made and used some calls, I've consumed some economic benefits, but I haven't yet paid for them. So I've got a present obligation to pay the phone company. There's a past event. I made the calls and used the data during August, and there will be an outflow of future economic benefits. I'll have to pay the $50 bill in September. So just to sort of recap, if I pay cash and then consume the expense in the next period, then that was a prepaid expense. Whereas if I incurred the expense this period and then didn't pay it until next period, that would be an accrued expense. Revenues can actually work the same way. There's going to be two types of balance day adjustments for revenues as well. So there's going to be prepaid revenue, which is revenue that's been received in advance but not yet earned. So that could be I've got the money in the previous period, I'm not going to earn it until next period. So we'd call that a prepaid revenue. The opposite would be where I've received or earned the revenue, but I won't receive the money until next period. We call that an accrued revenue, revenue that's been earned but not yet received. Let's have a look at an example of a prepaid revenue. A really common example would be airlines. So a lot of people pay for their flights well before they actually take their flight. So let's say a customer pays an airline $900 for flights in October, but they're not actually going to fly until November. So if they're not going to fly until November, the airline won't earn that revenue until November. So if we were to do a balance sheet, we'd call that prepaid revenue. We'd stop it at the end of October. We've received $900 from a customer, but we haven't earned it yet. So we're going to call that a current liability called prepaid revenue. So why is that a liability? Because there's a present obligation to provide someone with a flight. There's a past event, the customer paid us $900. There'll be a future outflow of economic benefits. We'll have to fly them up to wherever they're going, and that'll require fuel, that'll require staff and food on the plane and so on. So that meets the three definitions of a liability. The opposite could be an accrued revenue, and that's revenue that's been earned but not yet received. And probably the most common example would be interest. Let's say I'm earning $50 interest from the bank in July. Well, generally the bank doesn't pay that until the subsequent month, in this case August. So I would call that an accrued revenue, and at the end of July, if I was going to do a balance sheet, I'd say that's an asset. I've earned $50 interest, I just haven't received it yet. So what we say is there's a resource I control, I'm legally entitled to the $50, it's mine, no one else can take it from me. There was a past event, I earned all the interest during July, that's a past event. And there will be an inflow of future economic benefits, which will be the $50 interest I'm going to get in August.